get it all settled, you know? What's up guys? In today's video, I'm gonna explain exactly how term life insurance works. So term life insurance in Canada is really easy to understand. The easiest way that I can compare it is to renting a house. You pay rent during that period and you get to live in the house. When you leave, you're not taking anything with you. You just cancel it and be on your way. So how term life insurance works is you pick a term that you want to go with. And now there's a number of different terms. So there's term 10, term 15, 20, 25, 30, 35, 40. There's what's known as level to 65, which just basically means if you're 30, it'll be the same price until you're 65. If you're 40, if you're 50, it doesn't matter. It'll be level till 65. There's also pick a term from a few different companies in Canada where you pick any number you want. So it could be 18-year term, could be 27, could be an odd number, an even number. You get to pick whatever it is, okay? Now, term life insurance is a fixed price during that term. So whatever term you pick, the insurance company is going to base the price on how many years you have it for. So if it's 10 years, it's obviously gonna be less expensive than if it was 15 years or 20 years. The longer the term, the more expensive it's gonna be because they have to cover you for a longer period of time, okay? So let's say you pick a term 10. What happens when that term is now finished, okay? So you're in your 9th year and 364 days and your term is coming up for renewal. What do you do at that point? Now, most insurance companies in Canada, but not all, I should caveat that, not all of them, but most insurance companies in Canada will have something that's known as renewability. So all that means is that at that point, you have the option of renewing that term for another period. And whatever your period is, that's what it'll be. So if it's a term 10, you'd renew it for another 10 years. If it was a term 20, it'd be for another 20 years, okay? Well, the price is obviously going to skyrocket. I shouldn't say skyrocket, but it's going to increase dramatically, usually 3 to 4 times what it was before. So if you were paying $30, now expect to be paying $90 to $100 a month, okay? Now this renewability option that I told you about, it's what we call a guaranteed renewability. So what does that mean? Well, let's say that in the 7th year of your term, you had some type of medical condition, you had a heart attack, or you developed some type of disease, or you had some adverse health issue where going out onto the market and getting another life insurance policy from another carrier isn't possible, right? They won't insure you anymore, okay? So this guaranteed renewability says, well, no matter what condition you're in, no matter what health issues that have arisen over this term, over these 10 years, we will guarantee renew your term at the end of it. So this is an important feature, especially for people who are choosing a term product that's not very long. And so when I say not very long, I mean 10 to 15, 10 to 20 years, somewhere in there, because the chances of you having to renew it for a little while longer, especially if you're younger, in your 20s to 30s, is gonna be pretty high. So you wanna make sure that the company you pick has a guaranteed renewability option, just to be on the safe side. If anything does happen, you can renew it, okay? The second option that most carriers, again in Canada, will have is convertibility. And convertibility just means that at the end of the term, or anywhere in the term, I should say, you have the option of converting it into a permanent life policy. And I'm not gonna talk about that in this video, I'll talk about it in another video, but you have that option. And again, that option is regardless of your health condition. So you don't need to do underwriting again. If you have an adverse health issue, it's guaranteed convertibility, okay? So, what else can I say about term life insurance? Yeah, I mentioned that it's exactly like renting a house. So when you cancel your policy or when the term's done and you no longer choose to go with it again, there's no equity in it. You don't take anything with you. It's just used to cover you for a specific period of your life. It's the most inexpensive type of life insurance in Canada. It's easiest to understand. You pick a term that you're comfortable with and that you think you need. So maybe you're in your early 20s, you might need a term 30 to get you to 50, maybe 55, 60. Maybe you're in your 40s or 50s, maybe you only need a term 10 or a term 20, okay? So other than that, I don't know that there's much more else I can say about term life insurance. One thing that I want to add in this video is, and it's a little bit of a biased opinion, of course, and a little bit biased, but I'm the CEO of Affinity Life, and Affinity Life is an online life insurance marketplace where you can view life insurance quotes and actually apply 100% online. So if you wanted to check out what a term product would look like for you, what the price would be in different terms, you can check that out. I'll put that in the description below and you can view some prices. Other than that, I think that's everything that I can say about term life insurance. If I didn't answer one of your questions that you had about term life insurance, just drop it in the comments and I'll definitely try and either make another video about it or answer the comment and answer your question. So with that, I will see you guys in the next one.